Thanks everybody for being here. Hope you're all excited. Just very quickly, who, if anybody, is from the life side? Yes, my people. Are the rest of you guys PNC or mixed PNC health? PNC, PNC. Got it. Cool. So the life side of the business is perhaps a little bit behind where the PNC side is. So some of this might be findings that you guys came to a couple of years ago. But I also like to think that the differences in the nature of the business mean we may learn some things first. And so, green to advance. So, as I said, I am the lead for actuarial engineering and advanced models. What does that mean? Basically, my job is to lead a team of developers, actuaries, data scientists, to figure out how to ease the kind of technology flow of getting advanced models, so machine learning, AI, broader data science, actually out into actuarial workflows. This is a surprisingly large challenge. So my talk today, I'm a product person, my talk today is basically a retro, looking back at kind of the wave of AI and ML in insurance that we're kind of coming to the close of. I think there have been a lot of think pieces recently around kind of this first wave of insurtechs and the various things about Lemonade and then like Pisto and also Us Haven Tech. And there have been other think pieces about like, oh, AI, did we do all the things we thought we could do with COVID or not? This is less navel-gazing, but I think also helpful. And so with that in mind, I'm going to actually be using probably two, because there's not a lot of like people here, reference cases, kind of business missions, if you will, to contextualize the investments that we've made over the last kind of 10, 15 years. Let's kind of put ourselves in our bodies in 2010. Oh, what a time. And think about kind of what we're doing. So, like I said, I'm going to structure this a lot like a retro. So we'll start with we'll start with what did we actually set out to do? And so I'll talk about those business missions and then frame up the investments that were made. What didn't go so well, what did go so well, and then wrap up with, okay, we took a look at how things went. What do we do now? But before we do that, I like to start all of my retros actually with a celebration of like, sometimes there's stuff that's more than well, you know? There's stuff that's like, yeah! And so to me, I think that there's a big yeah in that the whole reason it's worth doing a retro is you can't like swing a cat. I don't know who's swinging cats, but you can't swing a cat without finding AI or ML in any part of the insurance industry today. It's everywhere. I would be willing to bet that every single person in this room at some point this year is either going to have to make a business case, implement, or like revisit an AI or ML investment and kind of think about how we proceed going forward. It's everywhere. It's why it's worth talking about. So, no, green? There we go. What were we trying to do? So I'm going to skip over one of the challenges, but I think it's helpful because we don't do AI or ML in a vacuum. This is not an academic conference to talk about like the latest attribution or contributions research. This is a talk about how it works in business. And so I'm going to set out two big business missions, and I think using big missions is helpful because from them flows a number of types of investments, but also it's a way to kind of take large things that are still relevant today. So the first mission is making life insurance accessible to the middle market. The life insurance industry has traditionally done a really great job of selling to people who need things like estate planning. But life insurance is tremendously valuable and impactful in helping families and communities, particularly in lower income markets. but we haven't done a really good job at actually executing on that. There's actually very clearly like a demonstrable need. Ooh, Lisa. Yes, 7 in 10 Americans know they need life insurance, but there's a huge gap in only 4 in 10 actually have life insurance, right? That's a lot of people who don't, are like, I need this, I don't got it. Like I said, these are big problems. So spent a lot of time thinking about them. And the kind of common wisdom comes down to, one, the kind of gateway product, term life, if you will, is running on really, really tight margins. So how do you bring the price down while kind of completely changing who you're marketing to, what the risks are? The second is the process is long and complicated. Again, bringing ourselves back to like our 2010, 2007 lives, like it could take you 6 months to actually get a policy issued, and you had to go like drive to a lab and like have somebody stick you with a needle. It's not super fun. And then lastly, access to products, right? 2010, the DTC market that we like know is not here. Oh, there's definitely DTC offerings, but there's also a lot of kind of late night, not really affordable products because they're definitely not meant for healthy people. So we have these challenges. Hopefully you're thinking, oh, these are things that we could solve. Skipping this one, disability is the other kind of mission that I'm going to talk about. So believe it or not, what work is was changing even prior to 2020. And so I think it's arguable, but kind of hard to, I buy it. The disability is kind of one of the kind of most important coverages, individual coverages you can get. There's like a Fed study they do every year, and like a truly shocking number. I feel like it's like a lot. It's like more than 50% of Americans would not be able to come up with $500 if something happened. So disability, hugely important, very material. But the traditional individual market is built for the way we used to work, where you have a kind of office, you go to it, you do your task, and you do that job from now until you're 65, because that's kind of the way the regs have the coverage structured. That's not how jobs work anymore. And so you end up with a couple of challenges. You end up with, okay, I need to design a new product, but I need to do it for a kind of unknown type of risk. I also need a lot more data than I used to need. DI is also very data intensive. Again, we talked about margins with term. DI margins are also quite thin. The regulation is also very, very strong. And if you're talking about a different type of work where it's unknown, you have to have an eye on that. How many claims am I going to have? Not just because of the cost of the claim, but the expense of the claim. So those are our missions. We kind of have a couple of themes around cost. How much is it going to cost me to do this? Access. Can I get the product, the DTC thing? And user experience. It can't take me 6 months and a needle in my arm to just get like basic coverage. And so a slew of investments. This is like just a very high level sampling, kind of arranged around these themes, were made. And I think it's important to say, again, like lots of success in a lot of these things. Before we like do our victory lap, there were some things that did not go so great. And so I'm splitting this up into data and process, and I'm starting with data because data is the place to start. And I have an XKCD comic because I think you have to. I read somewhere it's required. And so I'm going to start with the elephant in the room, which is, I said before, life insurers, really great at serving people who need estate planning. I imagine most of you have thought of a person. That means our data set represents that person. When you try and serve different people, you need to figure out what their risks are and understand that you're going to have to go get new data. And when you go get new data, that opens up an entirely different set of challenges of, can I trust where this data was sourced from? How do I maintain it? Is this data consistent with my other data? Like, does this A1C measurement, which is, I think, a diabetes thing, line up with this other A1C measurement from a different part of the country, from a different point in time? And so there is the potential for bias in the data, how much work it takes to deal with that, and then sourcing the right data. Traditionally, in life insurance, you have interactions with customers. You have interactions with the customer more or less once or twice when you sell the policy, and then some kind of servicing. Again, life insurance claims are, you're not talking to the customer. So we need to source, if you're going to use ML models, you need a lot of data, more than just like a thing that happens once in somebody's life, right? Whether it's retirement or, the other thing. So we needed to go out and get new data. And this is a new experience and something that our systems were not prepared for. You guys over here, I forget the name of your company? Yes, you were talking about like being able to accommodate new columns, unstructured data, and that is absolutely a challenge that the life carriers faced as well. Of, we have the system and it was implemented in like COBOL, and you just pray that you don't break it. And then lastly, when we think about DI, where you have claims and medical data coming through, you have to deal, again, with unstructured data, but also looking back and asking yourself, I have this piece of paper from 20 years ago. Do I invest in like digitizing it and encoding it as data or not? And making that decision is really hard. Okay, so process. So I mentioned a little bit about the tech stack, but a little bit more on that. I think when we build models, we do that in kind of a self-contained environment, right? Nobody's like running live in prod. They're like prototyping code. I think nobody would disagree that sometimes the technology that insurance companies use is maybe not the newest. And so if you need to get the model that you built kind of in the office actually out into facing customers, you need a path to do that that is going to be able to integrate with the technology that you're actually using and do so in a timely manner. And so gaps in the tech stack, I mentioned the COBOL thing. That is very true. There's an admin system that is aspirationally named after the year 1970. It can be very hard to integrate with the rest of the tech stack. The next kind of challenge, I think, is we're very excited that we have this new fun box of tools. Ooh, the machine learning model is going to help us do things. But we didn't always take the time to make sure that things was a really kind of clear business problem that was relevant to the mission we were trying to accomplish, and that actually added value. And so you can end up in a place where, all right, I have a really good model for predicting if this person is going to be triaged in a certain way in the underwriting path, but I don't need to know that. I just need to underwrite them, and then I will know that answer. Predicting what path they're going to go down is less helpful for me than just doing it. So sometimes it pays to take a little bit of extra time at the beginning and be really, 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 really clear on what you're trying to do. And lastly, the model development process tended to follow a more waterfall-like approach. So putting each step as a monolith in sequence. And this hurt in two ways. I'd say the first, going back to our elephant from before, a lot of times testing for bias happened late. So you get all the way through your model development, And you're like, all right, let's just like bang this out, and your model fails. And you have to go back all the way to like data collection, feature engineering, and figure out how to fix it. And that's really expensive. I do want to like props to like not putting out bad models. That was very good. But it's really expensive to do it that way. It also hurt because you end up delaying value. Like, this is very like agile spiel, but like, it's true. So waterfall, hard. But again, I said good things happened. Good things really did happen. So governance, I want to like hammer on that again. I think that you only have to look around at like other industries to see what happens if you don't bring like ethics, values, responsibility to, and like real governance to these processes. And I actually think that the insurance industry, I am an actuary, so props to actuaries, did a really good job of like making sure that the models that were deployed were sound and responsive. And I think we also learned that by ensuring that the models were sound, we actually made them better. It's like nobody wants like a jerky model. It was, like served our customers better. DTC, like made possible by AI. And lastly, accelerated underwriting has like I mentioned 6 months before. We're talking like 2 minutes now. It's kind of truly made insurance more accessible for people who are like working 9 to 5, just busy people. And we learned that process matters. People are willing to pay for process. All right, so what didn't go well? What did go well? What do we do now? So like I said at the beginning, I'm betting everybody's working on projects right now. And so some things to think about are when you're looking at the data, I'm sure we were all burned at some point by like crummy data, and you remember that pain, and I will like leave you to that pain. But we need to think about the data with like our eyes fully open, both in terms of data quality and data responsibility. So that goes to data quality, data responsibility, and also like data conformity. So data quality could be weird. Account for it being weird in your project plans. Responsibility, like it's more than don't be creepy. Like we're in the business of trust. Like we need to be in the business of trust. And conformity, I think there was historically a reason because of technology to have very strong data structures, but we have to assume that the data is going to change. And so whenever you can use technology to like free you up a little bit from like, in this exact like here and here point on the piece of paper is where I get this feature, like do that. Laser. Second is moonshots are great. Love a moonshot. But if you can, break it down into some stairs, or in this case, a ladder. Add value earlier. Again, having a really clear business question focus will help you break this down. Also, do ethics along the way, do bias testing along the way, do value validation along the way. And lastly, if you have a good mission, stick with the good mission. Like, I think insurance, just like other places, is affected by like, you know, the Great Resignation. People want to be inspired. People want to like do something cool and like work with a purpose. So like those missions I started this talk with were good missions. We should keep going after the good missions. Just because we didn't like solve them doesn't mean they weren't worth pursuing. And so that is the end of my talk, and now it is question time.